Hey everyone, and welcome back to our series, where we dive deep into India's top mutual funds. In this episode, we are shining a light on ICICI Large and Mid-Cap Fund, a scheme that seeks to generate capital appreciation by investing at least 35% of its total assets in equity and equity-related instruments of large-cap companies and mid-cap companies each. Now, if you have missed our earlier videos, don't worry. You can explore those videos by clicking the info button. We've already covered mutual fund schemes from top AMCs like Motilal Oswal, Quant, DSP, HDFC AMC, and many more. In this video, we'll break down everything you need to know, including the fund's key details, investment strategy, market cap mix, top holdings, sector exposures, fund manager insights, investment structure, historical returns, and of course, the taxation structure. So, let's dive right into it, starting with a quick introduction to who we are. We are PA Wealth, a full-spectrum investment firm offering expert guidance in PMS, mutual funds, AIFs, bonds, insurance, SME IPOs, startup investments, and Dubai real estate. Subscribe to stay connected with the latest trends and smart opportunities. Alright, let's start with the basic details of the ICICI Large and Mid-Cap Fund. Launched on the 9th of July 1998, this mutual fund scheme currently manages assets worth around 22,856 crore rupees. Moving on to the investment strategy. The scheme has a mix of top-down and bottom-up approach in stock selection. From a top-down perspective, the focus would be to generate alpha through active sectoral rotation. From a bottom-up perspective, the scheme will concentrate on business and economic fundamentals, seeking to identify companies with reasonable profitability and scalability, supported by sustainable competitive advantages. Let's now explore the portfolio mix by category-wise holdings. In this fund's portfolio, large cap form 44.18% of the total allocation. Mid-cap account for 29.23%, small cap for 18.9%. The remaining 7.6% is held in cash and cash equivalents. Now let's check out the top 10 holdings of this fund. The top 10 holdings include Maruti Suzuki, FSN E-Commerce Ventures, ICICI Bank, SBI Cards and Payment Service, Avenue Supermarts, Larsen & Toubro, Axis Bank, Alchem Laboratories, Motherson Sumi Wiring and Page Industries. Moving on to the top 10 sector exposures. The fund is primarily exposed to the following sectors: banks, automobile, auto ancillaries, finance, IT software, infrastructure developers, pharmaceuticals, e-commerce, casting and forgings, FMCG. Let's now meet the fund manager of the scheme, Ihab Dalwai. He has been managing this fund since June 2022 and has overall 13 years of experience. He is currently managing schemes like ICICI Quality Fund Growth, ICICI Infrastructure Fund, ICICI Balance Advantage Fund, and ICICI Multi-Asset Fund. Now let's take a look at the investment details. The minimum investment is 100 rupees SIP and 5,000 rupees for lump sum. There's no lock-in period. However, in respect of each purchase or switch-in of units, an exit load of 1.00% is payable if units are redeemed or switched out within 1 month. No exit load is payable if units are redeemed or switched out after 1 month from the date of allotment. Let's move on to the returns generated. In the last 1 year, the fund has delivered return of 6.09%, while the benchmark have the return of just 1.54%. In the last 3 years, the fund has delivered a return of 24.35%, and the benchmark gave return of 21.54%. In 5 years, the fund generated the return of 28.31%, with benchmark providing return of 24.43%. Finally, let's discuss the taxability of earnings from this fund. Starting with capital gains. If you sell units after 1 year, gains up to 1.25 lakh rupees in a financial year are tax-free. Gains above 1.25 lakh rupees are taxed at 12.5%. If you sell units within 1 year, the entire gain is taxed at 20%. Now let's talk about dividend taxation. Dividends are added to the income of the investors and taxed according to their respective tax slabs. If an investor's dividend income exceeds rupees 5,000 in a financial year or 10,000 after the 1st of April 2025, the fund house also deducts a TDS of 10% before distributing the dividend. That's all for today. If you found this video insightful, give it a thumbs up and subscribe for more research-based financial content. Don't forget to click the bell icon for alerts on potential multi-bagger stocks. Got a mutual fund you want us to cover next? Drop it in the comments below. Thanks for watching and we'll see you in the next video.